First of all, I want to thank everyone that's joining us today on behalf of SPE Asset Management Technical Section. Laura and I are pleased to moderate today's webinar, which is on oil and gas project management and its financial impacts. So we're very pleased to have Gautam here today. How are you, Gautam?
Morning, Michael and Nora. Very
Morning.
pleased to be here. Thank you for the opportunity and let's get started.
Yes, a little bit of housekeeping here. We want to go ahead and make you aware that we did change our name at the ATCE this year. We are no longer the management technical section, but we're doubling down on asset. So we've added asset management technical section. So you see more, no change in the taxonomy and our mission, but just creating more clarity of our direction to others that are outside SPE as well. So in way of an introduction, Laura, you want to go ahead and start?
Sure. Just a little bit about me. I handle the marketing and the webinar coordination for the asset management technical section and keep all our communications going in a consistent direction.
Laura, that's fantastic. Yeah, Advertas and your leadership does matter with our marketing, helping us with these webinars and keeping us consistent every month. My name is Michael Edwards. I'm the program chair, and I'm actually serving under the new chair, Hitesh, I'm sorry. I issue this morning. I haven't had my coffee. So I am with Accenture. We've been purchased by Accenture and working with that great team over there, one of the largest employers in the world. So I'm pleased to actually co-moderate today with Laura. Next slide. Laura, you want to say something?
This is just a little bit. In order to access this session when we're complete, if you'd like to watch it again or send it to a colleague, you must be logged into your SPE Connect account. And then from there, you'll go to library and then webinar recordings. If you want to hit that QR code, it'll take you there. But again, you must be logged in. So log into SPE Connect, go from there.
That's fantastic, Laura. Really appreciate that organization by you and Advertas. So we're going to introduce Gautam. Before we do that, we want to make you aware that next month we will have a presentation from Bravo, which is a Brazilian independent oil and gas company, an executive, Carlos Masteron. Last name I can't remember. Carlos is a fantastic executive. We're going to send out more information from Bravo Independent Oil and Gas Company here pretty soon. Did I cover everything, Laura?
I think so.
Okay.
I think so. Just a little bit about today's talk. We're introducing our speaker here, obviously, and ourselves. Then he'll give his talk. And then at the end, if you want to submit your questions via the Q&A box, we can take a few of those as we have time at the end.
Perfect. Without further ado, Gautam, if you want to go ahead and share your slides, we're real pleased to have you. You are a current manager for the Corporate R&D department at NOV in Houston, and you hold roles in held roles in lower carbon technology, new product development, and project management. You also hold a bachelor's degree in petroleum engineering from the University of Pune in India, and an MBA and master's of management in energy degrees from Tulane University. Gautam has also worked in the US, UAE, Singapore, and India. Glad to have you, Gautam.
Thank you so much. And if I may request the screen.
There you go.
Yes.
You are welcome to take it away.
Great.
And share your screen.
All right, let me know. All right, so good morning, good evening, wherever our esteemed panelists and guests are joining from. I'm happy to discuss my experience in project management. We'll also bring to bear some of the points we've highlighted in a couple of papers that our technical section has written over the past couple of years. And so today's talk will be split up into three broad parts. In the first part, I'll walk you through the history and evolution of project management as a discipline within oil and gas. Next, I'll talk about the career trajectories that are typical in our industry. And then the third part is something that you won't find in our current papers, but hopefully in our next set of papers, which is the financial impacts of project management. And I'm happy to take questions towards the end. So just to bring everybody up to speed, all of us take great pride in how Edwin Drake kickstarted the surface drilling industry in 1854 in Titusville. And if you draw a long arc of history today, our industry spends more than 500 billion a year in capex alone. And we're always looking at individual wells for smaller operators or leases for mid-sized and large operators, all the way to transportation infrastructure that includes pipelines, compressor stations, and gathering stations. And then, of course, our downstream colleagues engage in refining or producing chemicals and petrochemicals. So, all of this together is a series of projects with concurrent activities and handoffs and ownership changes and a lot of sourcing and procurement, of course. So, if I were to shorten it, I would say you create an asset, you produce profits from it, which is the monetization of it, and then the profits that you earn have to be converted into assets again. So we're in this constant cycle of evolving, managing risks, generating shareholder value. And in terms of trends, if you look back, we did not really call this discipline project management for a good 90 to 100 years. It was only around the 1950s where highway construction, defense construction had matured sufficiently that everybody was benefiting from techniques like the critical path method and also the program evaluation and review technique. Those were relatively simple techniques. And then our beloved Gantt chart came along around 1910. We leveraged that fully for about 50 odd years. And then we started getting more and more complex because everything became global. The set of customers became global, the set of projects became global. So management decision making had to evolve. And we also then started evolving into using things like the waterfall method. We looked at risk management. And of course, more recently, in the past 15, 20 years, we've looked at agile methodology. The stage gate process is something that a lot of product companies also use very rigorously. And of course, one of the most famous developments is the Chevron project development and execution process, which you can fondly refer to as chip dip. And of course, all this could not have been orchestrated without the creation of formal project associations. So in Europe, we had the International Project Management Association set up in the mid 1970s. And at roughly the same time in North America, we saw the creation of the Project Management Institute. And today, there is hardly any project manager that does not go through the full PMI certification process. There is a standard body of work called the Project Management Book of Knowledge Guide, which takes novices through the certification process in order to be called certified project managers. And that's basically how things have evolved. If I can just take another few seconds to highlight what happened in the last 20, 25 years, ERP systems became very widespread. And of course, the oil and gas industry is always at the forefront of adopting new techniques and technologies to either save on costs or increase our revenues. But when you integrate entire functions across large operations and large corporates, you really start understanding how global workforces, high speed internet, mobile telephony, all of them came together like never before. And now we see efficiency gains from those integration efforts even today. And of course, when we look at the large projects, especially offshore, we could not have pulled those off without very close cooperation with our EPC partners, so engineering, procurement, and construction companies. And of course, internally, no matter what function, whether legal, finance, HR, or HSE, over time, everybody has begun to leverage a common backbone of reporting, tracking, and making sure the right information flows to the right people at the right time. Another very powerful technique that came about in the last 20 odd years is called front end loading. We looked at how deficiencies and delays can impact the financial performance of projects and companies. So the front end loading became very important as more and more work was done by EPC companies and less of the actual construction and infrastructure work was done by operators in house. So there are limits to what an operator or an asset owner's project manager can do or say when it's not his ownership at stake. But then there's also a very clear communication protocol that the front end loading methodology brings to bear. And so we said, okay, that is a good middle ground. Everybody has to be transparent and everybody has looked at various reasons for delays and failures, but let's move on and look at what we can do better together. And of course, I would be remiss if I did not give due credit to things like artificial intelligence and machine learning in today's day and age. I don't remember a day in the last 24 odd months where I have not reviewed some kind of process improvement that has been made better or possible using either in-house techniques or third-party products. And of course, we are at the cusp of what we are calling agentic solutions where human-like analysis and decision making are being programmed into tools, thereby reducing the workload for repetitive tasks and in some cases even improving efficiency. And of course, our industry never holds back from training existing employees for new skill sets. So we've seen a lot of our folks dive headlong into this new domain, and it's wonderful to see the bridges that are being created by people who've come from the project world and are leveraging their experience to take AI and ML driven products and processes to the next level for our industry's benefit. And of course, a small example where we're looking at third party abilities being improved by AI are things like parametric insurance. Let's say there's a hurricane in a country. Earlier, the insurance industry would have a back and forth actuarial process, but over time, people are now beginning to experiment with parametric solutions where if say the rainfall exceeds a certain number of insurance inches rather, your insurance policy is all approved and immediately paid out instead of going through the entire actuarial process. Of course, it's not something that we should shy away from, but the oil and gas industry owns so many assets around the world. Just our insurance bill is pretty high, so you can imagine the efficiency gains that come by integrating AI and ML, even by third party providers of services and goods to us. And I'm happy to answer any questions at this point. If Laura and Michael, you want to let me know, or I can move on to the second part.
Yeah, let's see. Anybody have any questions before we move on?
Yep, I don't see any.
All right. So let's just jump into a little more granular details. Let's understand who the main decision makers are and what sort of chain of command you would typically see in a PM organization. You would usually have a portfolio manager, and a portfolio is nothing but a collection of programs. And the program manager, which is a program, is basically a collection of projects. So, in terms of complexity, visibility, reporting, accountability, you go from project to program to portfolios, with each of them having their own deliverables and benchmarks. But on a day to day basis, operationally, you would always have your QA, QC team, delays, quality issues, tricks that actually work to release payments and things like that. The granular details all happen at the manager level within both QA, QC, and project control. And of course, procurement is such a massive function in our industry. You would always have a very strong procurement team. And then, of course, there is a lot of engineering. Some of it is outsourced, like feed, but there is also the asset owner, and there's a lot of owner furnished equipment, especially on the ground support side, the power side, or the transportation side. So there's a lot of moving parts, but I think over time we've established very good reporting protocols and job functions. Of course, when you look at opportunities and challenges, it's always great to have a well resourced team when your target is clearly defined. You want to have the budget approvals in place. So you do not want to exceed your budget, of course. But of course, we do overshoot on time and cost some time. But there are remedial methodologies in place for that too. Communication, of course, is a very important function. We're constantly uncovering risks and gaps. What may not have been visible during the planning stage can crop up somewhere in the execution phase. Some risks can be internal to the asset owner. Very often, risks are external to them. So, there is a whole set of rules and contractual obligations that we rely upon to smoothen out those bumps as well. Of course, when it comes to decision making, safety is always first. We always strive to maintain cordial relations and show the utmost respect for human and financial capital in our industry. Since we work with very heavy equipment, very stressful situations, long lead times, many different cultures, and many different locations where work processes can differ from place to place. It's always good to prioritize team success over individual brilliance. And I think our industry is a shining example of that. In terms of challenges, of course, the biggest one is always to retain the sponsor's trust so that they understand that you played a critical role in the assetization monetization cycle, that I explained earlier. And you do not want to compromise on technical standards because competition will keep us on our toes. We always want to agree on the goals that we want to achieve and then design and optimize around those agreed upon goals. Next, of course, the value of time is cannot be understated. You want to complete ahead of schedule if possible, or you also want to be cognizant of potential challenges. Maybe you can add a little bit of buffer time. That's also a very highly acknowledged way of operating, both for good and bad reasons. And of course, no industry can say that we are having no challenges in attracting, motivating, and rewarding top talent. But to my younger colleagues that are listening, I think after a good 20 years in this industry, you just become thick skinned and you enjoy the various moves and cultures that this industry exposes you to. And I think every opportunity is a growth opportunity. So I think our industry is doing a great job of attracting, but of course, we can always find some room for improvement. Just to jump into the third part, which is not in our papers, like I said, but I did summarize the impact of project management on financial performance. But I can take a 30-second pause to review any questions we may have received so far, Laura.
Yes, of course. Okay, here's one. How does AI integrate into project management with the fluidity of the oil and gas field? Do you have any particular programs you would recommend for utilization?
Very good question. It's the top question in the minds of many people today. And I just want to preface my answer with the fact that I have never worked for an operator. So my answer may not be the complete answer you expect. But let's say your reservoir engineering studies give you a certain level of confidence. When you start planning around that asset with that level of confidence, you still have to integrate all your other project functions all the way from construction to handover and commissioning. Now, with every single handshake that happens in between, there is room for error. There are hidden risks. Maybe the next set of AI tools that we bring out will have the ability to perform those handshakes at a very fast rate. It is still a little bit of a manual process to a large extent, but I think over time, anything you can do to visualize, communicate, flag, and escalate issues sooner than later in a preventive fashion, I think you will have a great scope for AI tools to play a vital role. And of course, let's not forget that we are constantly looking at things like geopolitical risks. Those, I think, will always be, or to a large extent, be in the human domain. But any risk that you can use historical data to train an AI tool or an LLM so that you go in with a set of prompts which are approved by the project team and you say, let me compare what my tool says with what my team is saying. Maybe there are some historical trends that historical data used for training can teach AI, and maybe that human experience does not exist in my team, right? So we have to have the humility to say, yes, we have to look for options, we have to look for ideas. But like I say, trust but verify. So I would always defer to an expert human's opinion. It might take a little bit longer, it might take a little more time and effort to travel to a project site, evaluate things that may be outliers. And every project is unique to a certain sense. So anything we can do to collect that information, improve the AI tool, will only make the next set of recommendations or operational workflow improvements better. I hope that helps.
So I also like this question from a pretty experienced project manager that's in Algeria that's worked in the defense sector across multiple disciplinary electronics, electrical engineering, just joined the oil and gas sector. And their views, they're having struggles with applying their project management background into the oil and gas, primarily due to the people they're working with are very technical. Any advice you would give this new project manager entering our
Yes,
industry?
very much. I think this is a very common experience that most of us have some time or the other in our careers. I remember I've worked with people who are not from, say, petroleum engineering backgrounds, but may have been from construction or equipment or mechanical engineering backgrounds. The difference between their industry and ours is we work with a lot of non-informational variables. We have a huge number of regulatory compliances to achieve at every step of the way. The cost of not having a compliance box checked off in time can quadruple or even compound if you try to leapfrog it. So, in some cases, we have to retrain our minds to say, let us not optimize for early start of production, to give an example, but let us optimize for full compliance. And yes, that learning experience then goes into the next project and you adjust your estimated timelines based on that. Maybe some geographies are a little more strict, maybe some are a little more experienced and mature. Maybe there's a whole set of third party service providers and consultants in some geography that can help you with compliance and permitting and things like that. But I don't think any asset manager would say, I'm okay with signing off on a project just to see a disaster happen 6 to 12 months down the line, right? That's a red line. We cannot cross that red line. So I understand your perspective. I understand your frustration sometimes, but believe me, I've done projects and now I'm doing products. At every step, the number of opinions that you have to reconcile, the number of constraints that you have to optimize through can sometimes be frustrating, but I think we have to remember that nothing should blow up in our faces literally. Everybody should go home safely. We are part of many nations infrastructure. We are part of large employment bases around the world. So sometimes when you're not used to difficult timeline based decisions, I understand frustration can creep in, but I do not see a shortcut to it either, because the risk is also so high that any outlier event that occurs, you destroy 10 years of profits in a matter of hours. I would urge.
Gautam, thank you. That was really good. I'm going to let you continue with your presentation on part three. We do
Great,
have some questions coming in. We'll get to the questions when you're done with part three.
great,
Thank
great.
you.
So there are 5 or 6 major areas that most management and leadership efforts are focused on. Capital efficiency and cost control is always number one. We are in a cyclical business. You create assets when you can. We also are impacted by things like high interest rates or delays or low commodity prices. So we have to be flexible. Optimization, of course, the output of your project has to be as high as possible, as fast as possible. But of course, like I just mentioned in my previous answer, we can't always do it the way we want to. Sometimes progress is non-linear, but at the end of it, if you have higher production volumes eventually, and sometimes you get surprised on the upside, because by the time, even if a project is delayed, but when it comes on stream, your per unit cost in the market has increased, so you more than make up for a delay. Then, of course, risk management is a constant endeavor in our business. We are always looking at multiple risks. Sometimes, as I said, risks don't appear to be visible early on in the planning phase, but rules can change, equipment can break down, there could be COVID like situations, there could be externalities from the government side. So we are constantly doing our best to evolve and function given a changing and fluid landscape. We also have to protect our reputation above all else. Yes, we do see instances of fines and delays, but in the longer scheme of things, over a 100 to 200 year life of a large company, I think everything is a learning experience, and no one accident should destroy the whole company. That's a very good approach to have for risk management. Then, of course, with time, your strategy is evolving. So, do you want to add projects in a certain geography? Do you want to address cost efficiencies using digital tools at some point? Do you want to churn your portfolio and say a certain level of price is not achievable in a certain geography, so I might as well exit? I might as well redeploy that capital into other geographies. Sometimes you're a partner, sometimes partnerships don't work out. Sometimes what you think will be the value add of your partner turns out to be a hindrance or a constraint. So things happen, but you have to keep a fluid strategy. And then, of course, you have to look at the whole life cycle. You can't say, pardon me, you can't say my reservoir study looks excellent, so therefore this has $1 billion value attached to it in a financial simulation. The number of risks you have to overcome, the number of potential delays, the potential risks that you have to overcome will probably add so much cost that you will have a very different view 3 to 4 steps down the line. And in spite of that view, if your hypothesis still holds, then of course you should commit to it over the life cycle while retaining the right. If something really drastic happens at the worldwide level, you do reserve the right to shut down projects at an emergency level. And just to round out and close on this issue, I'll say most of what we might have seen or heard may have been a level or two above us initially in our careers, but I've myself benefited from trying to put myself in an asset owner's shoes while I was a PM. I've tried to pick up on the stresses and the constraints, even though they were not really part of my deliverable. But if I align myself to the overall need for lower cost or early delivery, then I can, of course, have a positive impact on the NPV, the net present value of a project, and of course, on the IRR as well. Do you benefit by bringing production on stream with your specifications and constraints at the highest level? Yes, both IRR and NPV improve if you do that. One way that our industry is unique is where we have to assign dollar values to avoided losses. So a loss of operating ability at the equipment level can cost you a few 100,000 in a few days. You expand that to a field or to a lease, a major shutdown could not only jeopardize your reservoir's stability and performance, but of course it will have a financial hit on you as well. So it's okay to be a little bit slower as long as you build in your risk mitigation techniques, you provide stability, and investment returns love stability, especially in the commodities business. And last, of course, we would not be credible in our own industry if we were misaligned with our stakeholders and our sponsors. So the more closely aligned we are, the more openly we communicate, the more openly we act with humility and say, yes, we'll learn lessons along the way, but we'll stay our path, we'll make positive changes, and we'll try to deliver sustainable IRR and NPV growth. I think that's the trick that you come to when you go full circle in this industry over a decade or two. So with that, I'll conclude my talk and maybe we can take some more questions. Thank you.
Gautam, thank you so much. Laura and I are looking at the questions. We'll get to each one of you, but I do have a question for you regarding our taxonomy. Can you share with us what you have learned, linking it back to our asset management technical section taxonomy? Which learnings would you have and guidance for the audience here if you're a project manager?
Yes, very much. I think in all the technical sections that I've either been a part of or contributed to, I think starting a brand new section with a very large taxonomy is something that very few people would have had the courage to. So, thanks to the first 3 years of all our leaders, all the volunteers, we never shied from or shied away from adding components. We tried to hit on every component of the taxonomy, HSE, sustainability, financial performance, economics, career management, talent retention. I could go on and on. Taxonomy is so vast. In 3 papers, we still have not hit on every topic out there. Please take a minute to download the last 2 or 3 papers. A section has written for ATCEs over the last 3 years. I think we'll be able to cover the remaining items of the taxonomy in the fourth paper. But I think every time you meet experts, especially from disciplines that are not your core discipline, you go home and you sleep on things and you wake up and say, that's interesting. I can take a lesson away from that person's experience into my work. I can improve things at my employer or my project. So it's a gift that never stops giving, to be honest. And we're happy to share our knowledge very selflessly.
I think that's a very good point. And as we go through our careers, our views on risk and our views on how we mitigate those risks are ever changing. They're evolving, they're maturing. So I appreciate you demonstrating that. Laura, do you want to take one of these questions or you want me to start?
Sure, I can go ahead. So we have a comment here. Given the advancement in people, skills, and digital systems, how have the cost, production ramp up, and schedule variation from plan improved over time?
Yeah, it's a good question. Unfortunately, I won't be able to give you a global answer because only someone who has studied the global set of opportunities can do it. But from what I've seen and heard in my career, I can say that no expense is spared in our industry to improve our skill set, reduce costs, integrate things into common backbones that the entire firm or corporate setup can use. So over time that we have begun to produce a lot more, let's say 20 years, if you see the production growth versus the marginal cost per barrel. Of course, geography to geography, that would be a different number. But if we were continuously adding controllable costs to the marginal cost per barrel, we would be out of business in 2 to 5 years. So I think it's to the credit of the leadership of our industry. Of course, we work very closely with financiers, JV partners, national oil companies, banks. Everybody's aligned. We sometimes slow down or pause so that we can reassess the situation depending on the economic environment. But we always come back stronger and bigger. And sometimes you have to be leaner to be stronger. This is one of those few industries where you can produce a lot more with fewer people in some environments. Yes, you'll sacrifice some skills at the expense of surviving and maintaining a core operating level of your business. But I think as soon as things stabilize, we start taking more risks. We manage those risks differently. We operate in a band of profitability at a company level. So everybody's acutely aware of when things are slowing down or turning negative. We have to reduce those costs. But over a 20, 30, 50-year career, I don't see any evidence to suggest that we have not delivered more for less per barrel in many geographies. I also want to just caveat that by saying there are non-technology, non-operating, non-engineering costs that also sit in the cost per barrel. It would not be right for me to comment on that at a webinar level. But yes, there are compulsions, sometimes political, sometimes regulatory, where companies have to take decisions that benefit their consumers, but may not be a cut and dry sort of financial black and white kind of decision. But that's the reality of the world we live in.
Gautam, you really emphasize the growing complexity of what we're having to build as far as projects. I'll just throw that in. It's not just around that we're keeping the complexity at a level where we're trying to reduce our cost. And yes, our people are advancing, our systems are advancing, but the complexity of what we're trying to bring online as far as projects is increasing. It's quite exciting to see some of the innovative breakthroughs that we're already making as we're going to address these complexities.
Very. I can take 30 seconds to just take our audience's imagination a couple of steps forward. Let's say you're a gas producer. Let's say you have a power producer interested in taking off your gas so that he can produce power because he has a data center customer saying, 2 years from now, I want to have a fully powered data center in the middle of nowhere. Your gas could be 20 miles away or 500 miles away. Imagine the number of handshakes that have to happen. Imagine the level of complexity before you start producing. Then, of course, the power industry's own set of constraints also have to be overcome. And then you have to be competitive enough that your, or rather, the power plant's output is competitive with other technology options for power generation that they may be evaluating. The fun never stops, I like to say. I don't think there's ever a boring day in our industry. We like to go a couple of steps forward, learn what lessons our customers are learning, just try to get a sense of what their biggest commitments and constraints are. And then hopefully that guides our decision making. And that's the opportunity, right? So if I can solve somebody else's problem, I can charge a healthy premium for being the first to solve it. That's competition in our world.
Thank you, Gautam. I really like the expansion of the value chain comment that you made on data centers. Laura, any other questions you want to?
Yeah, this is in terms of AI use cases. The question is, what successful AI use cases have you seen in project management in the oil industry?
Yeah, I can give you a very small but very impactful example. If you look at the procurement function, we are both a vendor to our customers and we also are a customer to our vendors, right? The minute you have a back and forth going on at a human level, which is entirely manual, there is a desire to speed things up. We are always short of time. So I've seen with my own eyes cases where an LLM was used to study historical quotes. The LLM was trained to generate a quote by just reading a customer's email saying, I want X units of this part number. What used to take, say, 4 to 5 days for a human being to look up a database of parts, talk to the manufacturing unit and say, do we have this part? Or if you don't, then when will it be available? The time aspect of it and the price aspect of it, both were sitting inside the procurement team. So we said, let's address the price aspect of it first. Let us train the LLM to say, go back 18 to 24 months, look at what the escalation for inflation and things like that are as a policy inside the company, generate a quote, send it to our internal folks for review and approval. Don't just blast it out to the customer. You can always fine tune it manually and say, look, yes, the body of knowledge that the LLM was trained on stops, let's say 12 months ago, but this is the reality from the last 6 to 8 months. So we have to have adders or adjustment clauses. These are our terms. This is where we can deliver, when we can deliver, at what price we can deliver, what is included, freight, no freight, X works. So everything gets done in a matter of hours now. And I've seen people benefit from that internally very much. So I can only imagine what it is at a larger firm. The actual steel procurement in an operator or a refiner is billions of dollars a year. Imagine just shaving off 15 to 20% of the man hours involved in coming up with your level 1 code, not depending on that code as the final code, but giving it to your team for final review and approval. I think that's a live case I've seen in my own year already. And I'm sure there are many more in operators which I may not be aware of, but I think everybody's beginning to see early moves in this direction.
I think
good.
It's helpful, yeah. A little bit of an adjacent question to that. In your experience, what risk categories are often most underestimated in oil and gas projects, and how should PMs address them early?
Brilliant question. I always like to divide risks between internal and external. Internal, of course, is did your reservoir studies put you in the right place to begin with. If you, as the owner of the asset or the lease, want to study reservoir data, did you do that phase well enough to justify putting time and effort into every successive step or not? That can be a make or break risk management step. Second is, when you have a consultative process with all your EPC and other vendors, is there a little bit of buffer or lean time or whatever you agree upon? The timeline, is it realistic enough? Are you able to take risks with the full knowledge of the internal cost of production? You may not have a sense of the price of the commodity when it is produced, unless you have a long-term customer with a contract or things like that. But the cost management risk exercise is something that I think always helps, even if it takes a little bit of time. And then, of course, we can go down to geographical risks, geopolitical risks, things like that. Second is, in terms of partnerships, sometimes you may not be the majority owner. Are you comfortable with a certain government or a certain state? Are you comfortable with another company? Is that working relationship based on great historical success? Are you starting small with the intent of building a great relationship over time? I think so many of those risks, which can start externally, end up becoming the responsibility of your internal team, right? So the PM per se may not be involved in those high level decisions, but you go to asset manager, program manager, portfolio manager, you start getting a sense of these being critical questions in their analysis. So it always helps to glean from a level or two above you, and it helps you to then take the next step in your career by having that overall composite understanding.
Excellent. Michael, do you want to take another one?
I think it would be good to address the subsurface part. There's a couple of questions in there, Laura, that you may saw as well. Excuse me. Commercial reserves and progression of commercial reserves is treated a bit separately. Gautam, I'm sure you have a viewpoint on this. Operators do go through the commercial reserve progression in different ways. It's actually a very exciting time. One of the majors just announced 12 discoveries over the last 12 months. This is pretty exciting time for exploration. AI scenario planning fits in there. But typically, when you determine a development, that's down the road. I think the question was more around how you can actually improve your successes on progressing your reserves through scenario planning. Any bridges got them on how we bridge the progression of our commercial reserves to project planning, because I know that's a huge gap. I know my background with wells, we were seen as some of the major risks for progression of our maturity of reserves to development.
Right.
You had any insights there?
And I like that this question came up right after the previous question, because I said that's the biggest internal risk, right?
Yeah.
To understand at what juncture your ownership becomes profitable is a very core question. Do each of those wells contribute? Are they accretive? What is your range of acceptable performance? Are you stress testing at very low output prices? Are you stress testing at low to negative growth in demand? You'll have to do all of that, and you'll have to trust the subsurface science to say, yes, we may have found great commercial quantities, but we still need to understand the full cost of bringing that production on stream. So you have typically 3 to 5 years, depending on your regulatory regime and the rules of the laws of the land, to go from discovery to production. And in offshore, you start looking at the cost of having very high spec equipment rented. There's a lead time to some of that. The per day cost of a lot of services, let's say in the offshore environment, also are part of your operating expense eventually. The more you simulate one step before and one step after each stage, the more clarity you will have on the pass through costs from each phase. It's very intuitive, but sometimes some companies are more siloed than the other. But if you take a step back and put on your banker's hat and you say X risks, Y risk, Z risk, associated cost, associated time, associated cost of mitigating that risk. So you keep adding up all the time and cost variables. Then you hold yourself to a very high standard and say, without compromising on safety, can I still deliver a great project? Yes, it might be late, for better or for worse. Sometimes it works out better. Commercial agreements also are a risk, which I didn't bring up, but I should. Offtake agreements. Look forward one step, take the pressure points from that, bring it back, resolve it over here in your phase if you can, if you have that authority and the cost control authority, and then hand over to the next stage of development and say, in our phase, we looked at this, we are handing this over to you with this range of acceptable outcomes. Now it's in your hands, and you also have to do the same exercise, go one step further, come back and say, can we resolve something at our level, or do we transfer that risk outside? And that's how you have that whole chain of risk management. So subsurface is the origin or starting point of some of risk in some sense, but I think forward and backward movement gives everybody sufficient visibility of mitigation options as well.
This is a very good point. Gautam, thank you for the insights. I remember as a young project manager going through PMP, triple constraints, scope, time, money, really important point there, but also critical path, understanding across. And you said bringing down the silos, really important that everybody understands what is in the critical path. It's an opportunity for new technologies to make a difference too. So it's amazing how we've reinvented ourselves. Laura, any other questions you want to highlight here? I see quite a few folks here.
Just scanned down the list.
I know. I think we addressed some of the AI questions. There was one on the Chevron framework. If you had any guidance on where to get more information on that, we can actually put that in the chat.
Yeah,
I
there
don't
are
think
some,
we have the chat enabled.
Okay.
yeah, if you just Google for CPDEP, there's a lot of public information on it,
Good.
going back all the way to the people who proposed it and how it came into being. And also over time, you'll start reading non-confidential information on projects that used it. Unfortunately, I cannot speak on their behalf. I have never worked for them, so it would not be appropriate for me to comment on
Sure.
pros and cons at this stage. But yes, there's a lot of public information on it, and also on the stage gate process.
Excellent. There was also a question around systemic risk. I don't think the paper had a highlight of the systemic risk, but any thoughts? I'm sure there's some other papers out there to talk about the systemic risk that we're seeing in our industry and how we're addressing those.
Yes. Yes, I think I can answer it mainly by contrasting it with other sectors, let's say the banking or financial sector. The location of our resources is geographically dispersed. The ownership of our resources is also dispersed. Because it is a physical resource, ownership can be surrendered. There are local pressures and there are real costs to taking resources out and distributing them at a long distance. Some of those systemic risks go away when you start going up the value chain in a particular location. So you may go from reserves, which is exploration and production, to refining, and eventually to chemicals and petrochemicals. And at some point in the future, there might be what's called COTC, crude oil to chemicals. So we have a natural sort of bulwark against systemic risks by ensuring that the end users are always visible. To a large extent, end users can be the local market. There are very deep export relations as well between friendly countries. As countries discover and develop resources, new geopolitical relationships get formed. The marginal cost may swing in favor of one geography because of the adoption of technology. Couple that with favorable geopolitics, that country might be able to open up export markets that were hitherto closed. Systemic risk always exists, but uh, since there are multiple producers and multiple consumers, there is a natural check and balance, and most risks can be geographically or temporally contained. Don't forget, we can move things with pipelines and ships and LNG carriers. So there are always ways of breaking through a constraint somewhere on an emergency basis, or let's say there's an earthquake or something that takes out some kind of refinery. For the short term, you can always bring products from other geographies. Yes, the cost may be higher, but your economy as such will not just stall. So I think there is, maybe in the mining industry we might have these same sensitivities, but this is not visible in many non-natural resource industries. And I think we've done a fantastic job. There's no boring day, like I say. It's these kinds of questions where you're thinking of the next set of friendly countries that you should expand your business with. It's always on everybody's mind. We all want to see common ground around prosperity and economic growth. So overcoming that by using technology and great geopolitical tailwinds is always a major benefit in our business.
Laura, how's our time?
We've got time for maybe one more.
Okay, one of my favorites, which is around looking at our well life cycle. When you think about projects, if you could give us your views about how we're actually doing it right, how we could do better, learn from how we're taking our entire portfolio over the life cycle of that's inclusive of wells all the way to the P&A. Should we be thinking about our project management in different ways? What about specializing ERPs to manage this, wells over the life cycle? Any insights on that?
Sure. And again, I'll preface this by saying I've never worked for an operator. I'll take my inputs with a grain of salt, but like most of us intuitively know a Gantt chart. Every meeting we join, we're building a Gantt chart in our mind. Discovery to launch, or discovery or first prototype to launch in the case of products. I also like to use what's called the cash flow timeline right below the Gantt chart. So in my mind, I'm doing both simultaneously. I'm trying to work within an acceptable range of outcomes. So my time constraints are on top, my budget constraints are on top, are at the bottom. All other constraints I try to fit in by resolving them financially or temporally. Right. So if it's one well, 5 wells, 50 wells, the number will only make the nominal numbers, dollars per barrel, dollars per day, dollars per year, go up. But if there are a common set of characteristics in that geography, in the reservoir, it's safe to say you can integrate them and treat them as one project for the purpose of analysis. Then you also have to be very careful and transparent about the assumptions you make. You have to leave room for things like the cost of capital increasing over time, which is a headwind to most projects. You have to make room for the price per unit falling, which is again a headwind to projects. But if you maintain the discipline of a Gantt chart and a financial timeline both together, and you're tweaking it, let's say on a quarterly or annual basis, and you're just benchmarking and comparing and saying, maybe I can shave off 0.5% somewhere. Maybe there are efficiency gains hiding in plain sight that I need my AI buddies to help me figure out. I think over time, when you add up all the efforts, all the gains, all the value discovery that a very good team does, I think you can be surprised on the upside to the kind of projects that we have been able to pull off, especially in harsh environments. I've done a lot of work on offshore projects, so I know everything is 2 to 3x in terms of cost, but that is also a problem when times are lean. So the asset owner has to say, yes, I have sufficient capital to withstand one down cycle. Uh, I'll use the down cycle to negotiate with my vendors and squeeze more and more costs out. Everybody will be suffering and crying for money. So somewhere or the other, we have to equalize as a give and take over a 10 to 12 year period across one interest rate cycle. There is also what I like to call an ROCE cycle, return on capital employed cycle. The same company, the same geography, 1970s to today, vastly different set of costs, vastly different set of risks, but we still operate in those geographies. We don't walk away entirely unless there are externalities. So I think good engineering, good project management, a level of market savvy, healthy respect for financial capital. I think if you internalize all of these and don't try to win every argument, understand that somebody else is constrained as a higher primacy than yours. So I think we've done a very good job given the number of projects and banks and governments that we have to deal with. So try to internalize that way of thinking. It's helped me in my career. But like I said, I've never worked for an operator, so my inputs may not be sufficiently valid.
Gautam, thank you for your views. Very valuable. It does sound like that might be an opportunity for another webinar. Talk about how we look at the full well life cycle in a project. We'll take note to that, but I think we are out of time, Laura, are we?
That is correct.
Okay. Well, thank you very much for joining us. Please follow us on LinkedIn, download our SPE paper, and give us your comments.
And maybe we can just spend a minute on plugging our Energy Thon event coming up in
Please,
January.
yeah, that's a great idea. Yes.
That's
Go
on the
ahead.
website too.
Do you want me to say something or you want to?
Yeah,
Yeah,
so
we're on both
basically,
on
we've
the.
been very fortunate that we've received the support and partnership of the Federal Reserve Bank of Dallas from their Houston office and also the United States Association for Energy Economics. We're hosting a day-long symposium. We'll bring together very high-level decision makers, very high-level economic thinkers, and we'll talk through 7 or 8 sessions of growth opportunities, constraints, risks. But what I wanted to highlight was this competition for SPE student chapters from the US and Canada called the Energy Thon. So there is a flyer which has been sent out to all the US and Canadian SPE chapters, student chapters. It is also on the SPE Connect website. So please feel free to put together a team. Your deliverable is a short PowerPoint and a short project report on a proposed data center for AI. That's right. Yeah, this QR code I think takes you there directly.
Yes.
So it'll be a good challenge. Think of that as a project, right? We're deliberately forcing our younger crowd to think about the end use of a commodity. There is a cost, there is a certain market price. There are things like construction risks, things like that go into the power side that we may not experience in our upstream side as often. But I think it'll be a good stretch kind of challenge, and everybody will benefit from understanding things 1 or 2 steps removed from the output of oil or gas. So it's a gas-fired power plant that you have to propose up to 20 megawatts location, nameplate capacity. And we're also looking at directing your efforts with whatever inputs we can. We're happy to respond to emails once you register. And we'll host the top 5 teams as finalists in January in Houston. That'll be great. We have some very good industry professionals coming in to judge. So whether you come to listen or to participate as a student, I think you'll have many takeaways at a very interesting time in our history.
So mark your calendars for January 14th and register. There are limited seats, so we encourage you to register as fast as you can. So thank you. Laura, any final closing?
I think that's it.
Okay, we'll see you next month.
All right. Thanks, guys.
Thank
Thank
you.
you so much. Good luck.